Good morning, everybody. Good morning. Oops, sorry about that. Checking my Twitter stream there, or X, sorry. Good morning. Good morning, Snow Moon. Welcome, welcome. We'll get started in a couple minutes. Let everybody file in here. Get your morning coffee. Or Diet Coke, whichever one you prefer. Good morning, DM. Appreciate you joining us. See some new faces on here. That's good. We'll get started about another minute here. Good morning, Butch. Looks like we had CPI come out, obviously, so tried to push towards that 68.50. That's going to be a key area overhead for today. So we'll talk about that. Talk about yesterday. Pretty significant move down in the market. So long weekend. Monday's off. 4-day week next week. Good morning. Good morning. All right, let's go ahead and jump right into it. Thanks everybody for joining us this morning. This is Michael coming to you from Game Edge on Friday, February 13th, Spooky Friday, obviously TGIF. Appreciate everybody joining us. As always here at Game Edge, we'll cover 3 pillars: sentiment, structure, and trend. And then we'll cover some individual equities at the end via our web app for market structure. If you want to throw those in the voice chat as we're going along. Yeah, happy Friday. I'm ready. Actually, tomorrow looks like nice weather here in East Tennessee, so it should be decent. So, all right, let's go ahead and jump right into our market trend model. I spoke about this pre-market prep yesterday. We were in a consolidation mode that we could go either direction. We could move back above these shorter-term momentum moving averages. This is based on the tick index. Bolded white line is your intraday instantaneous cumulative tick. And if you're a 0DT trader, that's what you want to be watching. And we'll take a look at our trading view market trend model here in a minute. But I was discussing a couple cautionary things that we're looking at as our tools. Our delta balance basically was weak into next week, and positioning was not necessarily looking for significant upside. I was not looking for, obviously, the largest drawdown we had yesterday, but there were some cascading factors, and we'll talk about that here in a few minutes. But the market trend model obviously started weakening right from the gate. You can see it here. We crossed below those momentum moving averages. So if you were thinking long yesterday, or you were long in positioning, as soon as we start crossing below these momentum moving averages, what we call railroad tracks, you should instantly start changing your thesis. At least start paring back your capital that's on the long side, and then possibly looking for the short side. And then obviously it was just a linear down day compared to what we've had of a linear up day. Now the key takeaway here is we're crossing into the colored ribbon just barely, but we did cross below the colored ribbon. So our mechanical portfolios are turned off today. So we're not putting capital at risk until we recover these colored ribbons again. Now, the colored ribbon, longer look back period, how we position longer term capital in the overall market is still significantly to the upside and expanding red above cyan. So two outcomes could happen here. We could cross into this colored ribbon, chop into it, half of it, and then recover and start moving back to the upside. Or we could cross into the colored ribbon, chop around a little bit, and then start moving back to the downside under the colored ribbon, then obviously be looking for a larger pullback within the overall market. All right, here's our trading view chart. The market trend model on the trading view chart. Obviously, we've seen a few days of weakness and sideways consolidation. You could look at these moving averages, the white, the blue, and the orange. I discussed that yesterday, that we had heading into the open, that we were trying to stack those back in the proper order, but they were not there yet, and we were basically flat to sideways. So for us, this is a cautionary period, as there's really no trend. This is just kind of listless, non-directional, and we're just chopping in a range. And we want to wait for an all clear signal for a move back to the upside. Well, quickly, right when we opened, we started seeing the red in the ribbon start to appear. And then we were below our ribbons very quickly. And then we started cutting through those momentum or railroad track moving averages. And really by 11 o'clock, we were in a decisive downtrend. So if you were thinking long again, that as soon as this started happening, obviously you're flipping your thesis, you're at least taking capital out of the market and at least going to cash. And then you had the opportunity to move to a short position once we crossed below these momentum moving averages, and then started in the linear down fashion. And we really didn't even recover any of these ribbons until right around 1:32 o'clock. I posted on X that we were seeing some abatement in the speculation to the downside. We were seeing some flattening in our call slopes and our vol M command and our spec C commands, so that the downside was probably likely at least going to be recovered at least for a little bit. And I posted extensively or exclusively, I'm not calling a bottom here. I'm just saying that the selling is probably going to taper off for a little bit. And then obviously the selling picked back up into the close here. Obviously we had some green, and then we flipped right back to red, and then we started moving back to the downside. So again, this gave you an opportunity to take some profit off the table on the short side when we started seeing that start to recover on 2 to 3 of our tools. And then you could have had the opportunity to reshort if you wanted on that bounce. All right, let's move on the SPXA. Again, we're looking at the SPX's largest, most notional options complex. And this is the SPXA is our institutional positioning. These are our tankers or our cruise ships. And then this is how we're positioning into the monthly OPEX. Now, we are put dominated now and well below the transition level. So significant weakness heading into the monthly OPEX. 6,900 overhead is going to be that key area to try to recover. Obviously, 6,850 would be that first area we'd like to get over, but 6,900 is going to be difficult to get above from an institutional standpoint. And then we have transition at 6,925 heading into next Friday. So we'll continue to watch this, but the structure has shifted fairly significantly to put dominated and a lot weaker than we were looking at even just previously a couple days ago. All right, moving on the SPXP. This is the upper quartile via our web app, obviously the highest weighted total OI. Put dominated now, well below the transition areas. And when we say below transition area, we're always in a more cautionary weakened look and bearish state. And then we need to recover 6,900, then obviously 6,950 to the upside. As long as we stay below this transition, we'd be looking to short the bounces up towards that 6,900 level. Again, unless the structure significantly changes. Now, key takeaway is we are supportive on the charm because of the out of the money puts here. 6,800 is going to be a key level. We get below 6,800, we still have some supportive charm all the way down towards 6,750. Below 6,750, basically the wheels fall off the wagon and we can drop very rapidly or very quickly down towards 6,700, depending on what market participants are positioning and what our market trend model looks like. Now, I'm not saying we're not going to move down and we're not going to have weakness, but with these out of the money puts, if we stay above 6,800, these will continue to be supportive charm as these continue to decay. Business contact, we don't look at the NQ, we actually look at QQQ. Just because dealer metrics, OI, and hedging on the NQ is not conducive of our tools. Moving on the SPXP GEX ratio, I talked about this yesterday that we were seeing the overall GEX ratio stay in a weakened state. So this is like a put call ratio, but it's short dated call gamma versus put gamma. And again, if the SPX is moving up, you want to see this in a positive slope, moving to the upside, indicating out of the money call speculation. As you can see, the previous 2 days, we did see the overall bounce in the GEX ratio, but it was not rising significantly to the upside, indicating the out of the money call speculation and speculators were coming in anticipating higher prices. And that was not occurring. And then actually we had a negative slope here on this day. And then we saw a small bounce, positive slope, and then just a significant negative slope. Now we are historically reaching 0.5, which is an area where we can see a bounce. I'm not saying the market is going to bounce, but this is an extreme level on the GEX ratio where the short dated put gamma is way outdated or overweighted over the short dated call gamma. Now we can stay down here for an elevated amount of time if the market is going to move to the downside and we have extended pullback. But historically, this is an area where we'll see some sort of relief bounce back to the upside. And then what we'll be watching is to see if we recover this one level, which is theoretical balance point between calls and puts, or do we just bounce up towards the +1 level and then get rejected and start moving back down? And we see more put hedging or more put speculation come into the downside. So key area to watch, we could see a possible bounce here at the 0.5 level. And then do we recover the 1 level moving into next week? Now, key takeaway on the delta bounce. So this delta bounce is basically telling us how market participants are positioning on out in time with these expiries, and then what we're seeing right now heading into the open. Now, the green dotted line is your right-hand plane. That's the out of the money call speculation above spot price. It is a negative slope. So out of the money speculation to the upside is not significantly present. Left-hand plane, these are in the money calls and out of the money puts. Now, it does have a positive slope, but we're below the zero line. So again, put dominated, giving an edge to the bears for the full structure. And then our delta bounce, the aggregate of both, is pegged at -1. So again, we're put dominated heading in to the overall open. So we'd be looking to short bounces to the upside until we recover key levels. So 68.50 is going to be that first key level, and then 6,900. And then still, we could be looking for stalling and shorting to the upside, but we move in a little bit more favorable environment if we're above 68.50. So our shorting would most likely we'd be watching for other key intraday vol metrics to give us an idea of where market participants are positioning. Next week, you see this extremely weak delta bounce pegged at -1, left-hand plane and right-hand plane well below zero. So again, put dominated heading into next week into the monthly OPEX. So we'll continue to watch this. This could improve heading into next week, depending on what resultant happens today with expiry, very large expiry today. We have 850,000 OI for the expiry today. But key takeaway is, as I discussed yesterday in the pre-market prep, that next week was looking weak heading into monthly OPEX. And yesterday it came to fruition early, and we were looking at negative slopes actually heading into the open yesterday. So I said there's a possibility of weakness, and it came to fruition. So net stack command, high sensitivity levels for today. These are going to be key areas to the upside. Obviously, 6,800 out of the money puts. If we're above that, these will continue to be supportive. And you see where out of the money puts change to in the money calls, 68.44. So if we get above and stay above 68.44, this can be in the money calls, which will help the bull's case to be supportive type action. But you'll notice the left-hand plane integral to the right-hand plane integral, significant in the money put dominated overhead. And this is going to continue to be the headwind all day long as we try to push that rock up the mountain. 69.50 is that area, again, way above where we'll be opening or where we could run to. Net charm, 68.50 in the money puts. You see where it flips to out of the money calls, 68.58. Mark that transition area on your overall chart. And then out of the money puts here, 69.57 changed in the money calls. And our gamma, this is our speed, 68.50 again. If we get above that, opportunity for a move to the upside towards 6,900. And then net Vanna, if we see volatility drop, the problem is if we see volatility drop, this is actually accentuating the selling until we get above these transition areas. So we'll continue to watch this 68.50 key area to get above, and then we could move towards a Vanna tailwind at 68.58 if we see volatility drop and out of the money calls go in. So those two key areas are going to be important. You see actually left-hand plane integral is much larger than the right-hand plane, and we do not see that very often. That's why I'm saying if volatility continues to drop, this is actually can accentuate the selling to the downside below those key areas there. So we'll continue to watch those heading into the open. All right, updated DS and transition areas for today. We looked at these after the CPI. So key transition areas here, we'll be looking at the trading view chart from 60 to 895 up towards, again, 69.30. DS 69.35 down towards 68.75. But again, key area 68.50 to get above. You'll notice significant charm there. We talked about significant gamma, and then negative net delta from those in the money puts overhead. 6,800 need to stay above. You see the positive charm there that will continue to be supportive of those out of the money puts as long as we're above these key levels. So we could overcome this charm to the downside with out of the money put speculation. So we'll be watching our intraday volume command intently to see if we get to see those market participants speculating to the downside. All right, let's go ahead and look at individual equities. Again, this is presented by GameEdge.us. So come join us. Newsletter Beyond the Bell delivered this weekend. Tools, thesis, and how we navigate the SPX option structure. And then, as always, free courses, a GameEdge Fast Pass options course, free options course. Make sure you check that out. Our blog, extensive education articles, good 10-minute reads to go through all of our thesis and tools. And then our pricing, come and check us out in the Discord, 14-day free trial, all the tools turned on. So, all right, let's go ahead and look at individual equities. Anybody wants to look at individual ones, go ahead and throw those in. Yes, we can look at QQQ and how we can frame the NQ trade. So let's go ahead and look at today's expiry. Put dominated, where we're at with spot price here. We actually see PGEX at 603 and then transition area here. I tell you what, we'll look at our trading view chart. I talked about this pre-market 600 to 602, your in trans level. You get above in trans, then you have an opportunity to move to the upside in a little bit more favorable environment, but you're still well below the P-trans level and zero GEX level at 620 and 621. So basically all you're doing is possibly moving into a more favorable environment, but you're still very weak being at the POI, negative GEX, and in trans level at 602. Historically, we see the POI level hold, and this is an area where market participants have speculated, high speculative area for the puts. And usually we see some monetization. If we see a sweep down towards 594, I'd anticipate some monetization into that level there at COTMP. This is basically where your out of the money puts can become in the money. And we usually see some monetization from market participants. But as of now, we're holding that 600 level. We need to get above 602 and then could drive up towards that 607 level. Same thing with SPY there also. So hopefully that helps you. Again, 602, we need to get above. If we continue to chop and get failed rejection at 602, then I'd look for more weakness down towards obviously 600 where we're at, and then 594. So, all right, let's go ahead and look at BABA. Let's look at this Friday, and then we'll look at the quartile. So BABA's put dominated, well below transition there. Going to be difficult to move up. 155 overhead, 160, 160, 250. That's going to be a difficult mountain to climb there today. Even if the market starts to recover. Upper quartile, obviously monthly expiry on BABA, put dominated, below transition, 155 still maintains that. If you get into transition and above, then 170 above, but really not anticipating that. You see significant in the money puts overhead that are probably going to be difficult to overcome into next week. All right, let's look at Netflix. Netflix, let's look at this Friday. So Netflix, put dominated, obviously narrow, 76 overhead. Your spot price is right there at the top of transition, but you see the net charm there. Going to be difficult for appreciation today on Netflix. Let's move to next Friday's expiry. You're at the bottom of transition there. 75 most likely will be supportive on Netflix unless we see the market fall apart, and then 80 to the upside, top of transition area into next Friday is where I'd be looking. And then upper quartile, kind of the same area, well below transition, significant in the money puts overhead, and you're put dominated. So Netflix looks fairly weak unless we change that around. So, okay. All right, here we go. Let's look at this heading into the open. Obviously, key areas for IWM is going to be 262, 263, 264. You're well below transition and in trans, so we can state there. As I just talked about the Qs, and then SPY trying to hold above 681 there, and then heading into the open on the SPX. 6,800, have to hold above. We get below 6,800, market will be extremely weak, and then 6,850 to the upside. Key areas there. So, all right, thanks everybody for joining us. Make it a great weekend. We appreciate everybody. Manage risk as always. Check us out on gammaedge.us, and let us know if you have any questions. Again, like and subscribe on X and YouTube. You'll be notified when we go live with any content or post any intraday content. Thanks everybody.